just gonna could be any. Oh, it's the.
Good evening, everyone. Thanks for turning up. Personal apology from me for selecting a meeting date when England are playing, but not very well apparently. So it was my choice. First of all, let's have some housekeeping. There are no fire alarms scheduled for this evening. Therefore, if the fire alarm sounds, please evacuate the building immediately. Fire exit is located at the rear of this room. Go down the stairs unless otherwise instructed and meet in the War Memorial Park. Members, please note that this meeting is being webcast live on the internet. Please switch off your phones to off or turn it to silent. And please can I remind members and officers that in order to be heard clearly within the room by those present and on the webcast, you must speak directly into your microphone. All right, straight into the agenda. Welcome to new members. I don't know if we've got any new members and existing members of Audit and Accounts Committee. Item 1, apologies for absence and substitutions. Have we got any apologies for absence or substitutions? No? Okay. Item 2 on the agenda, we have to appoint a vice chairman or vice chairperson. Have we got any nominations for vice chair? Councillor Bound.
I'd like to propose Councillor David Conquest.
Okay, do we have a seconder? Got 2 seconders there. Are there any other nominations? You're the vice chair, Councillor Conquest. Thanks very much. Item 3, declarations of interest. Are there any declarations of interest? I'll take that as a no. Number 4, urgent matters. Are there any urgent matters? No? Okay. Minutes of the meeting held on the 30th of March 2026. Does the committee agree that the minutes of the meeting held on the 31st of March 2026 are an accurate record? Bit of a typo there, mate, because it says 30th of March there and 31st there.
Oh.
All right? Okay. Seriously, do we agree that they're a true record? Members that were there? Yeah. Yeah, so I'll sign those then. Item 6, Ernst Young Audit Planning Report 2025 to 26. Adam, do you want to say anything before? No, so Misha, you're on.
Good evening, Chair and members of the Audit Committee. I'll take the report as read and I'll just highlight a few points and areas worth drawing out. So on page 5 and 6 of our report, I think it's page 17 and 18 actually of your packs. So we're now in phase 2 of the national programme to address the audit backlog with the focus on rebuilding assurance over time. This is in line with the NAO's LARIG, so local audit Reset and Recovery Implementation Guidance, a bit of a mouthful. So our approach has been risk-based, targeting the areas that matter most to support a move back towards unqualified opinions. So mainly this has been completing in-year procedures. The Council plays a key role in that recovery, particularly in ensuring strong financial reporting and audit evidence. The natural rebuild is now well progressed, and we are in the process of assessing opening balances and any historic gaps to support further progress towards a clean opinion. The outcome of this work will be communicated to impacted bodies and MHCLG by the end of July. We will share with you, as those charged with governance, an audit plan addendum that will follow in due course. It's just the timing of the meeting. We don't have that quite ready yet. And then on page 20 and 21 of your packs, so I'll just briefly touch on the risks. So there's no change from prior year across most of our core areas, including management override, revenue recognition, rental income, investment property valuations and pensions, which all remain consistent with prior year. There are some smaller changes to note in our audit approach this year. Firstly, while the significant risk around property, plant and equipment valuations remains unchanged, we will be placing a greater audit focus on this area following the introduction of the SITFA Bulletin 22 and the associated changes to the valuation requirements. Secondly, we've reduced the risk relating to the MGC joint venture, as the one-off transactions and adjustments we saw last year are not expected to reoccur this year. Finally, we've removed the risk around IFRS 16 that was included last year following the first-time adoption of the standard. Having completed our work on the implementation and considered the Council's lease portfolio, we no longer consider specific risk designation to be necessary in 25-26. And then on page 22, we've got materiality. So in terms of materiality, we've set our planning materiality at 2.05 million, with performance materiality at 1.54 million, and we will report any uncorrected differences above 103,000 to the committee. These thresholds help us focus our audit work on the most significant areas of the accounts, and as we've now received the draft financial statements, we'll revisit these levels as part of our normal audit processes, although not expecting any significant changes. And then finally, I think on page 44 of your pack, I believe, it's page 32 of ours. So finally on timing, we're now starting our main audit field work. We've already completed some of the early testing during our interim visit. We've already started working on some of the key areas such as PPE and investment property valuations. Thanks to the continued support of the finance team and the agreed timetable, we are progressing well and remain on track against our planned timeline. Thank you. I'm happy to take any questions.
Members, do we have any comments or questions to Ernst Young at all? Councillor Isaac.
Is this working?
Yeah.
Good, right. Okay. So it's page 9 of your report. 2024-25, you identified group accounting firm Manydown LLP as a significant risk area. And in 25-26, you said this matter has now been downgraded to a risk of material misstatement. However, you conclude by saying this remains an inherently higher risk area due to the complexity of group accounting requirements and the volume and judgment involved in the related disclosures. Could you give us, could you expand on that, give us a bit more idea of what those risks are and what is being done to mitigate them?
So I think in the previous year we had it as a significant risk because it was the first year that group accounts were being prepared. So there was a higher risk of errors or higher risk of things maybe not going quite as planned. So we've still got it as a risk. We just don't think it's as risky as last year because that was the first year that group accounts were being prepared.
So did you discover any problems then in the year that it was a high risk?
I think last year there were a couple of disclosure adjustments that needed to be made, but this year during our planning and interim work that we've done so far. We've been in regular communication and discussions about some of those adjustments and some of those transactions, so we're comfortable with making it an inherent risk, which is lower than a significant risk. I appreciate some of the terminology as our internal use of.
Okay, another one. Yep. So the next item on page 9, valuation of pension assets and liabilities. So you are saying essentially that the council engages an actuary to undertake the calculations about assets and liabilities. To what extent do you look at the work of the actuary in coming to any conclusions that you do come about the adequacy of the pension provision?
So we have an internal pension specialist team that we engage to kind of look at the valuation of the assets and liabilities. So we also perform our own procedures, but we have a specialist team that we also rely on the work of their assessment as well.
So you this time you said looks good.
John,
Oh. Sorry, could you just repeat your question?
I do apologise. It obviously doesn't. So your team have concluded that the that for this year that the provision that the pension arrangements are in good order.
We haven't started those audit procedures on the valuations yet, but we have concluded that we probably will be engaging the specialist team again to have a look at that.
Members, are there any more questions or comments to Ernst Young? Okay. With regard to that, does the committee agree to note the Ernst Young audit plan and report for 25-26? That's a yes, is it? Thank you very much. Item 7 on the agenda is the internal audit progress report, April to June 2026. Richard Bevan to report.
Thank you, Chair. So this is the regular report I do on the progress of the internal audit team, covering the period April to June, and also includes the current position of outstanding audit recommendations as at the 16th of June. Concerning audits completed in this period, there were none that had a reasonable limited assurance, which is good, but the 8 completed that had either substantial or full assurance. And those audits are summarised in my table starting on page 66, paragraph 3.2, going through to page 71. And for those audits, as per previous reports, I've shown the key points of the audit, the key findings, together with the responses from the relevant managers. And concerning recommendations, paragraph 4.1 on page 71 summarises the current position, and the overdue recommendations are shown in Appendix 1 and the remaining recommendations in Appendix 2. Just a note to the committee, I think it's important to highlight the number of overdue recommendations. We've done quite a lot of work with services in the last few months to try and clear a lot of the overdue ones. So the overall number is probably lower than it has been for a long time. So that's reassuring. And that's it really. Just to say, ask you to note the report. If you've got any questions, we will happily take them.
Okay, I think we've got a question from Councillor Chastain.
Thank you, Chair. I was looking at the parking services, Park 1, which is an overdue recommendation on page 76, and I note it says that there'll be a general enforcement policy be taken to Cabinet or be a leader decision in September. This kind of highlights a sort of a bit of a general issue about policies not going to scrutiny committees, because that I think should be. So I don't know whether that's a representation by error, that's where it's going to go. But it also, just from a perspective of internal audits where policies are identified for true things, they really should be going to scrutiny committees first.
This is the update I've had from the relevant head of service. I wouldn't know myself which committee it's meant to go to. If that's an error, then we'll take it up with the relevant head of service, yeah.
Can we make a recommendation, Chair, please, that that's picked up on and taken to the relevant head of service, because we shouldn't have policies just sliding through without scrutiny, especially when they impact residents?
I'm happy to do that.
You can pass it on, yeah.
Yeah, okay. Are there any more comments or questions to Richard? All right, given that then, does the committee agree that the report has been considered and commented on and noted? That's a yes then, is it? Thank you very much. And now we've got item 8 on the committee, the internal audit annual report 25 to 26. Paul, to introduce the report, please.
Thank you, Chair. This report provides the committee with my annual opinion on the effectiveness of the Council's risk management, control and governance processes for 25-26. I'll start by highlighting that opinion, which can be found on page 104, paragraph 264, where I've given a substantial assurance, and it's a statement that will appear in the annual governance statement, which I believe is on the agenda later on this evening. My opinion has been formed by the work carried out by the internal audit team throughout the year, and the committee, you're aware of those reports because they come to you as part of the progress reports. But what I have done on page 109, which is Appendix 1, I've highlighted all the audits that we've carried out, the assurance level that we've given to each of those audits, and the committee meeting that the report was presented to committee. So if you wish to look back, then you've got that there. I'd also like to highlight a graph that I've included in my paper, which is on page, paragraph 252, and that gives you a view of what the control environments looks like over the last 5 years, and that is based on the details that's found in Appendix 2. So there's a bit of reference there if you wish to look at that. I wasn't going to add any more to my paper, Chair, other than ask for the paper to be considered. Thank you.
Thank you very much. Once again, do we have any questions or comments for the officer? It doesn't sound like we do. So does the committee agree that the report's been considered and noted? That's a yes then. Okay. Item 9 on the agenda, the fraud update protecting the public purse. That's you again.
Thank you, Chair. Firstly, I'd just like to introduce Jamie Ailing, who's my senior fraud investigator. It's his first committee meeting today, and as we've got the annual report, and I thought we'd get him to show his face so you can see who does the hard work, who leads the team doing the hard work there. The report, as a committee will see, is the usual format I present to you, and it builds on the report that's presented to committee back in November. So I wasn't going to add any more other than the content in the report, so I just asked the report to be taken as read and considered. Thank you.
It will be taken as read as long as there's no comments and questions. Councillor Isaac.
Yeah, looking at the losses identified, section 5, the sort of standout one is council tax discount. We've got 184 cases giving rise to an actual loss identified of just under £93,000, and you've also prevented loss of over £105,000. Can you sort of give us a bit more background as to what the sort of pattern of behaviour is here in terms of council tax discount?
Thank you, Chair. Yes, it's primarily done through the work with the National Fraud Initiative, which is a Cabinet Office exercise that's carried out every year, where they compare the council tax discount database to the electoral register database. And it's where it identifies cases where you've got more than one person who's registered to vote, but also claiming single person discount. So we will look at those matches that come through to identify whether they are genuine. For example, you could have and Jamie will correct me if I'm wrong, you could have a student in the property who gets an exemption so they can claim a single person discount. But the majority of the cases we've identified is through that exercise, which demonstrates that the National Fraud Initiative work that that the country does really is a benefit to us.
So have we incurred a loss then or somebody incurred a loss of 93,000?
No, because it's detailed in the report that anything we identified is added back to the council tax bills, and then it's recovered through the council tax process, as Adam, I'm sure, could expand if you wish to know more on that one.
Are there any more comments, members, or questions? Once again, if that's the case, I think we can agree that report's been considered and noted. All in agreement? Thank you very much. Item 10 on the agenda is Local Code of Corporate Governance 2627. That's Adam to... Oh, Fiona?
Thank you, Chair.
Okay, apologies. I'm reading the script here.
Thank you, Chair. So the next two agenda items are both presented annually. This item is forward-looking into this year, and the annual governance statement, which Adam will present in a moment, is a review of last year. So this report asks committee to approve the Local Code of Corporate Governance for 26 and 27. It's set out in the appendix, and pages 226 to 228 in particular demonstrate the Council's policies and procedures which evidence compliance with the principles of good governance. There's nothing much more to say on it. Unless there are any other questions, I would request that the committee approve the code.
Members, are there any questions? No, I suggest we approve the report then. Okay? Agree? Now we've got 11, which is the annual governance statement, 25 to 26. That is Adam.
Thank you, Chair. So as Fiona's said, this is more a backward-looking review of our governance for the last year and looking at the effectiveness of our internal controls. Those of you who were on the committee last year will be familiar with it, but it does set out on pages 249 to 252 some of the areas for improvement that we identified last year and how we've progressed against those, and it also sets out areas identified that we will work on in the current financial year. The committee are asked to approve this annual governance statement, which is published in draft alongside the financial statements. It will be then for the leader and chief executive to sign off following your approval. So I'm happy to take any questions.
Once again, members, have we any questions? Doesn't sound like it. Oh, Councillor Isaac's thinking? No? No? Okay. So, with the absence of any questions, does the committee agree to approve the draft annual government statement? Yes? Well done. So item 12 on the agenda becomes the Treasury Management 25 to 26 annual report. Once again, that's you, Adam.
Yeah, thank you. I'll take the paper as read. This kind of sets out the performance of the last financial year. A couple of points to highlight. Our performance was above that budgeted, achieving a return on our Treasury Management investments of 5.62 million, which was 4.34% return. Section 7 sets out sort of benchmarking against other local authorities, and again this shows that we've achieved a higher rate of return with a lower risk profile, which is again positive. And just to highlight as well, that 4.34% return that we've achieved, the Bank of England average base rate for the last financial year was 4.04%, so again we're above that. The only other thing I want to draw your attention to is in section 9, there's a couple of proposed changes to the Treasury Management Strategy that will go to Council for approval. This reflects the decision taken to in relation to local government reorganisation and our position potentially to lend to Hart or Rushmore if they wish, and it's a good rate for us, which makes sense given the future for LGR and the fact that any lending to them would obviously be effectively intragroup. So we're looking to allow our higher counterparty for those two, as they are effectively will become one organisation in 1st of April 28. So that's the proposed change there, but obviously happy to take any questions that you may have.
Councillor Blackberry.
Thank you, Chair. Is there an actual appetite, or has there been inquiries from those councils?
Yeah, so we have made a loan with Rushmore. They are looking to refinance some of their debt, and we were looking to invest. So we've done that within the existing framework for in this financial year, which obviously will be reported in the quarterly update. They'll come to committee in September. But there is potential where they are looking to refinance more, so we may look to lend to them if we feel it's appropriate and the rate is comparable. But at this stage, it's more just to give us the flexibility to do so rather than any definitive decisions to do so.
Councillor Testane.
Thanks, Chair. Just a question for clarification. So, do we understand what will happen with LGR and how these loans will work across the different authorities? Once we could, for 1 minute we're the lendee, and then we're not going to put the lender, and then then we're not going to be. We're going to be the lending.
So effectively, on the 1st of April, what will happen is all the balance sheets of the authorities will be consolidated. So the amount that we have as an asset will be a liability on Rushmore's will effectively become zero. In doing this, it might mean that the refinancing costs for Rushmore will be lower and we're getting a good rate of return. So it's beneficial to both organisations, and it also means that a new unitary authority would not have significantly higher debt servicing costs in the future, hence recommending this as a change to the strategy.
The co-leader wants to speak.
Yeah, just to add a point, and the concern we have, or perhaps I don't have, but my future me might have, or future someone else. Rushmore's debt is obviously over £100 million. Most of it is short term. It's coming up to expiry in the next 4 years. It was Public Loans Work Board, but now it's not. It's going to have to go out to the market and find something else. What we don't want is them to go out to the market and have to be forced into paying a high level of interest and locking themselves into a long-term loan, because the new authority will then be stuck with that and not be able to do anything with it. So this way, we've got the flexibility. Clearly, if we lend them money when we come together, that sort of just sorts itself out. But it just becomes zero because they don't owe us and we don't owe. We've got no sort of debt. They've got no debt and we've got no asset. But what we don't want to do is the new authority start off in a position where one of the authorities has lots of very expensive long-term debt, which you're going to be saddled with forever. This gives us maximum flexibility to decide how we manage the finances, or how someone else manages the finances in 2028.
Councillor Testane.
Just to follow on, so just on a technicality, would it become internal borrowing, or would it be managed in a very different way?
Effectively, it would be a intragroup elimination, so it becomes effectively zero.
Okay. Are there any more? Councillor Isaac?
So this is another question about the impending formation of North Hampshire Council. So what is it that, given that that's 2 years away or less than that now, are you doing anything differently now in the way that you're managing our treasury management, and in particular things like the property investment strategy? I think there's still £25 million potentially to invest. I may be wrong on that, but presumably we're not going to be making any new long-term property acquisitions, and am I right in thinking that we would be looking to maximise liquidity as we go into the merger, but you're the expert, not me.
The strategy covers this financial year at the moment. Obviously, we will develop the strategy for 27-28, which will come to council. At the moment, we're not doing anything outside of the strategy that was approved in February by members. Obviously, this is focusing this paper on the Treasury management investments, not on property investment strategy. That's obviously a later paper, so I won't touch on that, and that's kind of separate from this. But at this stage in time, no, we're doing what we've been set out to do in the strategy. This is a proposed change because of a specific circumstance where we feel that it's appropriate to come back to council to ask for that change in strategy.
So I'm going to need to ask you the same question then on property investment strategy when we come to that report.
In terms of property investment strategy, it's not 25 million in the capital programme anymore. I'm trying to recall how much it is. It obviously sits within the regeneration and property team, so that's not my direct area. Obviously, I'm involved in it. But yeah, we haven't got any plans for any significant acquisitions at this stage. And obviously, as we progress and the structural change order is implemented, we assume in October or the autumn at least. And there will be specific regulations requiring us to inform the Shadow Council of any significant property disposals next year when they come in. But at this stage, we haven't got any significant plans.
Yes, I'll be right in thinking that it would be inappropriate for us to be acquiring any more long-term property assets.
Councillor James.
You're not wrong, but it'd be inappropriate for us to disclose in an open forum what our plans and intentions were, because you never do that. But we are mindful. We are always horizon scanning, recognising what is just in the future and how we're best able to make sure that the new authority is a good place to have options when it forms.
It's the principle, Gavin, not the actuality, and in a public forum, yeah, for a public body.
Have we set aside questions and comments? Oh, Councillor Blackburn.
Thank you, Chair. One thing I noticed, Table 6 on page 265, the very final line says percentage of investments held in accordance with the Council's approach to ESG investing, 100%. And then a few pages later, there's a table showing our various investments. And there's 3 columns at the end: own responsible investment policy, UN principles for responsible investment, and net zero asset managers initiative. And several of the investments listed in that table have no against them in those 3 columns. And I'm just not sure where the terminology mismatch presumably is between the 100% and those not being.
Yeah, so I think this has come up before, but obviously you're a newer member on the committee. In relation to that comment around the 100% and the no's in the table in Appendix 1, it's more reflective of the fact that the UK government and local authorities don't have any agreed long-term policies, and that rather than hence their no's, rather than it not being that they're not having any. So I mean, a lot of local authorities and the government have got climate change commitments and things like that, but they're just not a standardised policy as some of the funds that we've got there invested. So that's the difference.
I assume we're finished now with comments and questions. So does committee agree to note the Treasury Management 25-26 annual report and the proposed amendments to the Treasury Management strategy for 26-27? You do? Thank you. 13 on the agenda is the Audit and Accounts Committee annual report 25-26.
Me again. So yeah, this is the annual report which looks back at the work that the committee did last year. Obviously, Chair, you weren't a member of the committee then, but this was something that was introduced a couple of years ago following sort of some work done to implement best practice, including appointing obviously Richard as the independent member. So this will go to council. It just sets out kind of some of the work done last year, and yes, just for you to approve and provide any comments if there are any on that before it goes on to council for consideration.
So are there any comments? No? I suggest we approve that then and recommend the presentation of the annual report to the council for consideration. Okay? Agreed. Right. 14 is the annual property plan. There is a confidential appendix here within the report, and the intention is to discuss the pink Brentfords in a confidential session should we want to discuss any of those pink papers. So you need to tell me whether you want to discuss anything that's in the pink papers. Is that a no? Probably. Sorry? Probably. So, Liz, you've been here all night. So, you're happy to present. Well done.
Thank you, Chair. This report presents the year-end monitoring position for the annual property plan for last year. It builds on the mid-year report that I presented in November last year. The purpose of the report is to provide assurance over performance for last year and contains information required for members to discharge their responsibilities for the monitoring of the property investment strategy and annual property plan in relation to the Council's property portfolio and investment activity. It provides details of the proactive property management activities undertaken in relation to key focus areas, including disposals, long leasehold re-gears, rent reviews and lease renewals. I'd ask you to consider the report and provide any comments. Happy to take any questions.
Once again, are there any comments except what's on the pink papers? That's Isaac.
Yep. So there is reference at 5.2 5.1. One acquisition is in solicitors' hands with an update to be provided in mid-year 2026. I can't see anything in the pink that sort of refers to an acquisition, so I wonder if we could know more about that. Secondly, Farnham House. I think the Cabinet has approved recently the potential demolition of Farnham House, including the multi-storey car park. Can I understand what that means in relation to any sort of car parking income?
Yeah, as part of the deal with the AA, we are duty bound to provide them a certain level of parking. We can do that anywhere in Basingview, and I think it's you can access through Plot K, an area of parking which we could use instead. So it wouldn't actually lose the income would just move. But obviously from a demolition point of view, we want to get all options and prices over to us in terms of what's the best value, and it might be better value to knock the whole lot down as one and then obviously market the whole site.
So my point was, because it's quite chunky income, we're not in danger of losing that.
No, it's just going to be displaced, but we'll still get the income.
And question one?
Question one in relation to the sort of the acquisition, we're still in there's in terms of there's no sort of capital or implication because this is we're still in commercial negotiations. Still in commercial negotiations, so it is confidential at this stage. But it's a property with
Yes.
It's a property within Jay's Close and a sort of a consolidation of our interest there.
It's a nil value transaction.
Any other comments? Anybody? So I take it we're happy with the contents of the report? Yes? Well done. On to agenda item 15, which is the Audit and Accounts Work Programme, and that's what we've let ourselves in for, being on this committee. We got any comments on this work programme? You need to say something, Phil. Yeah. Come on then.
Just to say that in the meeting in September, there's 2 more items that need to go on. So RIPA policy, the Regulation of Investigatory Powers Act policy needs to go on there, and the viewing of social networking sites report. So there's 2 more reports that need to be added on there. But other than that, I think it is up to date for now, until more items come around.
Quite some full agendas, but we looks like we're going to agree to those. Yeah? It's brilliant. Believe that's the end of the meeting.
Yeah. That's
Okay? Thanks very much.
Thank you.